After the fireworks of the 4th of July, the labor market did add some additional spark to the economic updates. Beata Bukowski here with our weekly economic update. The Bureau of Labor Statistics last Friday has reported 209,000 jobs created, which was less than anticipated by market participants. Job growth in April and May was also revised for the lower by 110,000 jobs. Yet the unemployment rate dropped a bit from 3.7 to 3.6%. Though it's still higher than April's lows of 3.4. In the private sector, ADP has reported 497,000 jobs created, a ton more than anticipated. Annual pay for job stayers increased 6.4, whereas it increased 11.2 for job changers. These gains are still very high. They are off their highs. Looking over last year. Leisure and hospitality did lead those numbers, but right now, knowing that we are at a little bit more employed in leisure and hospitality now than we did in 2019, there is a good point here to be made. We are pretty much saturated in those sectors. So going forward, according to Nella Richardson, who's the chief economist for ADP, consumer-facing service industries, aka hospitality, had a strong June, aligning to push job creations higher than expected. But wage growth continues to ebb in these same industries, and hiring will likely be cresting after a late cycle surge. So we'll be on the lookout there. We currently have a total of 1.72 million collecting unemployment. That is substantially higher than the lows of 1.289 seen last September. As far as the Fed, well, yes, the minutes of the last Fed meeting came out last week, and they showed that the Fed is anticipating additional hikes to their benchmark Fed fund rate. So the Fed wants to continue hiking even though inflation is coming down and they themselves are anticipating a mild recession later this year. I don't understand why. We will be on the lookout for their next meeting. That's all I had for you today. Beata Bukowski, over and out.